Bernard Madoff managed a fraudulent investment portfolio, falsely claiming to oversee tens of billions of dollars for his clients. Ultimately, his scheme caused devastating financial losses, wiping out an estimated $65 billion in fictitious gains and impacting numerous investors, charities, and organizations. He was born on April 29, 1938 in Queens, New York, hailed from a middle-class Jewish family. Growing up, he exhibited an early interest in finance and securities trading. After attending Far Rockaway High School, Madoff pursued higher education at Hofstra University, where he initially studied law before transitioning to finance. In 1960, at the age of 22, Madoff founded Bernard L. Madoff Investment Securities LLC, laying the groundwork for what would appear to be a successful and reputable career in finance. His firm primarily focused on market making and proprietary trading and later expanded to become one of the largest market makers on Wall Street. Madoff's financial prowess earned him recognition, and in 1990 he became the non-executive chairman of the Nasdaq Stock Exchange. Madoff possessed an array of properties emblematic of his fraudulent empire. Notably, a lavish Manhattan penthouse, a sprawling Palm Beach estate, and a stately mansion in Montauk graced his portfolio. However, beneath the veneer of respectability and financial success, Madoff was orchestrating one of the most infamous Ponzi schemes in history. The scheme, which began in the early 1990s, involved using incoming funds from new investors to pay returns to existing ones, creating an illusion of consistent profits. His elaborate scam persisted for decades, affecting a wide array of investors, from celebrities to charities. The Ponzi scheme collapsed in 2008 amidst the financial crisis, and Madoff admitted to his sons and wife that the asset management business was a massive fraud. Subsequently, he was arrested, and in 2009 he pleaded guilty to 11 federal felonies. The alleged investment strategy that Madoff presented to his clients was a split-strike conversion strategy, which he claimed involved buying blue-chip stocks and using options to limit downside risk. He promised steady, consistent returns that were too good to be true, especially in both up and down markets. Investors were led to believe that their money was being actively and successfully managed in the financial markets with high, risk-adjusted returns. Bernard Madoff's life and legacy are now synonymous with financial deception, a cautionary tale about the consequences of unchecked greed and the devastating impact of white-collar crime on both individuals and institutions. Bernard Madoff's infamous Ponzi scheme included several influential investors, showcasing the indiscriminate nature of his deception. Nobel laureate and Holocaust survivor Elie Wiesel, who entrusted his foundation's funds to Madoff, faced significant losses. Director Steven Spielberg's charity, the Wunderkinder Foundation, also fell victim to the scheme. The Wilpon family, owners of the New York Mets, suffered substantial financial setbacks. Renowned institutions such as Fairfield Greenwich Group and Banco Santander also lost money, further highlighting the scheme's ability to dupe even sophisticated investors. These losses went beyond financial repercussions, tarnishing reputations and underscoring the devastating consequences of Madoff's elaborate fraud. The scandal not only shattered the financial portfolios of the wealthy, but also exposed the vulnerabilities in a system that failed to detect and prevent one of the largest financial frauds in history. In the next part of the video, we will look into Bernie Madoff's most pronounced personality traits. Deceptive. Madoff's deception went beyond mere financial fraud. It was a meticulously orchestrated scheme that spanned decades, involving false statements, fabricated reports, and the creation of an elaborate facade of investment success. Charismatic. Madoff's charm was a key element in winning the trust of investors. His ability to present himself as a reliable and seasoned financial professional contributed significantly to the longevity of his fraudulent activities. Manipulative. Madoff's manipulation extended to both individuals and institutions. He exploited personal connections, leveraged a network of influential contacts, and manipulated financial systems to perpetuate the illusion of a thriving investment enterprise. Cunning. Madoff's cunning was evident in the complexity of his scheme. He strategically manipulated financial transactions, ensuring that the scheme remained undetected by investors, regulators, and auditors for an extended period. Narcissistic. Madoff's actions revealed a profound narcissism with a focus on self-preservation and personal gain. The devastating impact on investors seemed secondary to his desire to maintain his own image and lifestyle. Confident, Madoff's unwavering confidence in his abilities was a key component of the deception. His confident demeanor reassured investors, regulators, and colleagues, contributing to the perception that he was a reliable and astute financial figure. Reserved. Madoff's reserved nature extended beyond the professional realm. He guarded details of his personal life closely, creating a mystique that made it difficult for others to discern the truth behind the carefully constructed facade. Calculating. The calculation behind Madoff's scheme was intricate. He meticulously planned each step, employing financial tactics and strategies to ensure the scheme's success while avoiding detection by those who might scrutinize his operations. Unscrupulous, Madoff's lack of ethical principles was evident in his conscious decision to defraud individuals, charities, and organizations. The scheme demonstrated a complete disregard for the devastating impact on the lives and livelihoods of those he deceived. Emotional isolation. As his scheme unraveled, Madoff became increasingly isolated. This isolation was not only physical but also emotional, as he distanced himself from individuals who might have questioned or uncovered his fraudulent activities. Arrogant. Madoff's arrogance was apparent in his belief that he could perpetuate the Ponzi scheme indefinitely. This arrogance, bordering on hubris, contributed to his downfall as investigators closed in on the fraudulent operations. Greedy. Madoff's insatiable greed was a driving force behind the perpetuation of the scheme. The quest for personal wealth seemed to overshadow any consideration of the consequences for the individuals and organizations he victimized. Composed. Even as investigations intensified and the magnitude of his fraud became evident, Madoff maintained a composed exterior. This composure, perhaps a defense mechanism, concealed the chaos and deception at the core of his financial empire. Dishonest. Madoff's dishonesty went beyond the financial realm. It permeated every aspect of his interactions. He misled investors, colleagues, and even family members, creating a web of deceit that extended far beyond the financial statements of his investment firm. Exploitative. Madoff's exploitation of trust and financial vulnerability was a central aspect of his personality. He preyed on individuals seeking investment opportunities, exploiting their confidence and manipulating their financial aspirations for his own gain.